Hi, everyone. Thank you for giving us the opportunity to talk about long-term care program. For people who don't know me, I'm a construction business broker with USI, and I've been with USI for a little bit over a year now. And one of my main goals is to really take my knowledge to serve my clients better. Prior to USI, I was an underwriter at CNA, and that really gave me a different perspective when it comes to putting together construction programs. With that, I will give it to Ryder.
Thank you for the start of the introduction, Kevin. This is Ryder Kimmis with USI. I'm an employee benefit consultant. I've been in benefits for a bit over a decade. Number of those were spent specifically focusing on long-term care insurance as a group benefit. So this Washington Trust Act, the Washington Cares Fund, as it's also known, is very near and dear to my heart. With that, we'll jump into it. We aim to spend about 15 minutes on this presentation, giving you all the high-level overview of the adamant need-to-know pieces of this payroll tax. If you do have any questions, we will share our contact information at the end, and you can absolutely reach out to us. We're happy to be a resource for you. So we're going to first start off with a quick level set in case anyone is new to long-term care. So long-term care is custodial care. It's assistance when your care is expected to last longer than 60 days. So to qualify for long-term care, you must need help with a certain number of activities of daily living. Those are the ones that you see there on the screen. I like to think of these as the first things that you do when you get up in the morning. So you get out of bed, you get dressed, you take a shower, you have something to eat. Those are all activities of daily living, very basic things that you rely on daily. Or it could be assistance that you need with something like Alzheimer's or dementia, cognitive impairment. We always ask folks at this point of the presentation what they estimate the odds of needing long-term care are once they reach the age of 65. So most folks expect to live past 65. Once they get there, what are the chances that they'll need long-term care? We get guesses anywhere from 25%, 40%, 50%. The actual answer is 70% of us will require long-term care once we reach the age of 65. So with that stat in mind and with the number of people who are requiring this service, the state decided to do something about it, likely because people aren't planning and don't have a plan in place for their long-term care expenses. So they enacted House Bill 1087 to create the Washington Long-Term Care Trust Act. You'll also hear it referred to as the Washington Cares Fund. The goal is to leverage a payroll tax to pay for a long-term care benefit for each employee in Washington state. Starting January 1st, 2022, so this coming January, there will be a 0.58% payroll tax. That 0.58% is not capped based on your overall income. So somebody who makes $50,000 is going to be hit with that 0.58%. Somebody who is going to make $250,000, $350,000, $500,000. Those people will continue to pay that 0.58% tax. So there's no cap on their overall income. Your responsibility as the employer. Fortunately, you're not responsible for contributing to the payroll tax. That is the employee's responsibility, but you are responsible for collecting that premium and remitting it to the state via that after payroll tax. I'll now pass it over to Kevin to jump into some examples of the payroll tax.
Thank you, Ryder. So these are three examples between 50, 100, and 250,000. And each of these salary or wages, they have the according 0.58% payroll tax. So the important part of this is really to do a cost analysis, comparing this payroll tax amount that you have to pay versus the long-term care premium that you will have to pay. And ultimately, if you consider the benefit, people who could truly take advantage of this payroll tax could be the people who make $50,000. So in other words, lower income people, and ultimately the $290 payroll tax if it's lower than a long-term care premium.
Great, thank you, Kevin. Now we'll go into some of the specifics on the plan overall. So benefits are available to those who pay into the tax starting January 1st of 2025. To qualify, you need to be at least 18 years old and live in Washington. And then you need to have paid into the program for two different ways. Number one is the way that most people will be benefit eligible. They'll have paid in for a total of 10 years without interruption of 5 or more consecutive years. Some people also could be benefit eligible by paying into the payroll tax for 3 years within the previous 6 years. And then finally, you'll need assistance with 3 out of the 10 activities of daily living. Those are the ones that we discussed at the beginning. And then there's a total pool of benefits of $36,500. And Kevin's going to talk about what that benefit amount looks like in comparison to the overall cost of long-term care services.
Great. So just imagine if this is a live event, we'll ask this question. What do you guys think the average duration that someone will stay in a long-term care facility? What that means is nursing home, assisted living, and music home care and whatnot. So the average is actually right around 3 years. And if you look at this diagram, this table, it talks a little bit about the monthly cost of each of the services. And if you divide that number by the 36,500 number, you can kind of tell between 3 to 5 months, it will exhaust the total pool of benefit.
Now we'll take a look at the employee exemption process. So there is a way that employees can opt out of this payroll tax, and probably a lot of you are tuned into this presentation because you're interested in how that works. So if an employee has a private long-term care insurance plan, that could be through their employer or through an individual advisor, they can apply for an exemption with the Employment Security Department. They have from October of this year to December 31st of 2022. And in theory, that sounds like a lot of time, but the deadlines are coming up rather quickly because employees who don't have a long-term care insurance plan currently, they'll need to have that plan in place by November 1st of 2021. So I like to think of it as, if you're interested in opting out, you need to keep a couple dates in your mind. Number one, you need to make sure you have a long-term care insurance plan in place by November 1st of this year. Your second date that you're looking at is starting on October 1st of this year, you're eligible to opt out. And that period runs from October 1st of this year to December 31st of 2022. Here's a quick look at the overall employee opt-out process. So it is the employee responsibility. They'll need to submit an application to the Employment Security Department with an age verifying ID and a copy of their long-term care insurance plan. The Employment Security Department can approve or they can decline that. So some employees will be approved, some will be declined. And so if they are approved, then the employee will provide a copy to their current and future employers. And the employer responsibility here is that you'll need to maintain a copy of that letter. Kevin, talk to us a little bit about HSAs.
Yeah, so essentially you are allowed to use HSA money to pay for the long-term care policies. And if you look at the right-hand side, we are looking at based on the age, there's a maximum amount that an HSA distribution could be used. And ultimately what this means is there won't be any pre-tax on the initial premium payment, and there won't be any post-tax on the benefit received.
Alrighty, thank you, Kevin. So now in this slide, we're going to take a look at the difference between the public versus the private long-term care insurance options. Overall, I like to say that these are they're a bit of a wash. There are advantages to the Washington state plan, there are advantages to the private LTC market. But I'll hit on a few of the key ones that I always like to talk about. The Washington state plan on that second one doesn't have any underwriting, so everybody's automatically approved. So if health is an issue for you and you don't think that you would pass a medical questionnaire, maybe the Washington state plan is right for you. On the private side, you will have underwriting that you'll need to go through, basically answering medical questions, and the private carriers can approve you or decline you. The Washington state plan, a big downside is that you can only receive your care in Washington state. So if you retire, you move out of state, you change jobs and you move out of state, you're not going to be eligible to receive the long-term care benefit unless you stay in Washington and receive that care in Washington. On the private side, you can get care anywhere within the US. There's even some policies allow for international coverage as well. The Washington state plan, you obviously can't use an HSA to contribute towards that payroll tax, while you can on the private LTC market, as Kevin just covered. Another advantage, I would say, of the Washington State plan is that your contributions end once you retire. So you're not going to continue paying for the payroll tax after you're no longer receiving a W-2 income. Private side works just like car insurance. You're going to continue paying your premium until you need to utilize that policy. So you're going to contribute your premium ongoing for the life of the policy. Now we'll take a quick look at how that pricing compares. So this is just purely from a pricing standpoint. How does traditional long-term care insurance or private long-term care insurance compare to the Washington State Trust Act? So the Washington State Trust Act is obviously based on your overall salary. So find your salary here on the right side, and then you can determine your annual payroll tax that you'll pay or about what that might be. So let's say you're making $100,000, you're going to have an annual payroll tax of $580. So take that $580 and compare that to the private long-term care insurance market on the left side. On that side, you'll see the age, your premium is based on how old you are. So let's say you are a 40-year-old, you're going to pay an annual premium of about $353. These are all sample rates, so they may be a little bit higher, they may be a little bit lower. But this is just to give you an idea. So that 40-year-old making $100,000 is going to pay less for a private long-term care insurance plan. If they were 55 years old, then they would pay $618 for the private plan, and they would be paying more than what they would be paying for the Washington State plan. So some considerations from a pricing standpoint, you want to look at how much money you're making, how old you are, and your overall health status. Now we'll do a quick breakdown of the group versus the individual long-term care insurance market. Group refers to if you're an employer or you are an employer and you'd like to offer a long-term care insurance plan to your employees, versus an individual long-term care insurance is a private long-term care insurance plan that you may get through a financial advisor or somebody else. So on the group side, there is less medical questions. So modified guarantee issue, simplified guarantee issue. There's essentially just going to be less questions on your medical application. On the individual side, you're going to have to answer all those questions. On the group side, there's group pricing. So we generally see about a 5 to 10% pricing discount. On the individual side, it'll be the full price. On the group side, it is gender neutral pricing. So males and females pay the same rate, whereas on the individual side, it's gender-based pricing. So females who live longer and are more likely to utilize a long-term care policy will actually pay more than their male counterparts. So as an employer, what are your options? We really see employers going in directions 1 or directions 2. Very few do nothing. So we commonly see employers who are going to offer a group long-term care insurance plan to their employees. They can do that in 3 different ways. They can pay for all of that benefit for all employees. They can pay for a carve out, a certain number of employees, and then offer voluntary to the rest, or they can offer it voluntary to the entire population. The second option is a direction that we see a lot of smaller employers going, and that's supporting their employees from a communication standpoint. So they're going to send communications out. They're going to educate them about what's going on with the payroll tax and what their options are. And then lastly, they're going to refer them. So they're going to give them an option to connect with an individual private long-term care insurance advisor who can walk them through their options. Some upcoming challenges that we like to point out, and I'll point out a few on here. One being that we don't know if the state is going to require employees who have opted out to continue to prove that they have a long-term care insurance plan in place. So it'll be interesting to see if that is audited afterwards or if that exemption is permanent. We also don't know what levels of coverage qualify a long-term care insurance plan to be eligible to opt out. So we always recommend that you look at least the minimum level of that $36,500. Buy a policy at least that amount or above is kind of the recommendation that we make. The last bit is that in that blue line at the bottom, that there is significant bandwidth issues developing with the carriers. They're getting a lot of individual applications. They're getting a lot of applications from employers who are interested in offering it. So the earlier that you can get your application in for long-term care insurance, the better. On the screen, we have my contact information along with Kevin's contact information. Please don't hesitate to reach out to us with any questions. We've been talking lately about long-term care all day, every day, and so we love to continue that conversation and chat with you as well. That concludes today's presentation. Kevin, anything else that you want to add?
Yeah, I just want to add, USI has been providing a lot of resources for employee benefit, property and casualty. So feel free to reach out if there's some other items or topics that you want to talk about. and or you want to receive some information on. Thank you everyone for your attention, and thank you, Ryder.
Yes, thank you, everybody.